Hello guys, this is Pedram Raufi and you're watching the trading review, the review of the market for today and for next day. We actually uh, make this program 2 times a week, so we're going to see what would go on with the markets during today and tomorrow. We're going to check the news background, and of course we're going to go through all of the important fundamental stock indexes, Forex pairs, and of course we're going to check the prices of Bitcoin and Ethereum, the cryptocurrency, most important currencies. So let's start from the news background, which is kind of empty. Nothing is changing. Federal Reserve System is going to hike the interest rate. War between Russia and Ukraine continues, and there was some speculation from China about 3 days ago, which was related to the coronavirus spread in some of cities of China. As you know, on the scare and on the fear of the war, which is now going on in the Eastern Europe, the oil prices and gas prices are rising so sharply. They had a really good rally, but previously, 3 days ago, 4 days ago, China have said that there is a coronavirus new infection spreading through some Chinese cities. And as you know, when there is a probability of China's cities or ports quarantine or closure, there's a really high probability of oil prices and gas prices falling as well, because China is the main importer of the oil, because it's manufacturing power, which is the most higher one. And because of this factor, they kind of tried to control the prices of oil. And that's what we have seen um, during past 3 days. This really sharp downward movement, which have been started by the news about the China's new COVID spreading. And as you know, China can control the situation. So China have been showed his own power, that China's power on the markets remain, and it would remain. And of course, there's a really high interest of United States, of Biden administration, in the oil price and gas price rising, because they are going to sell the really huge amount of gas and oil from our Arabic country and partners, and of course from themselves to Western Europe, because of the war situation which is going on, because of the sanctions which are going to happen against Russia. So they're kind of making a lot of money on that, but China doesn't really like the situation, because China is the importer of oil, and China needs oil, but it doesn't need it really in the really high prices. So China could really start to manipulate on the market. So China has the power, and it could kind of change the picture on the market. So you have to actually skip have to actually pay attention on this factor, and don't forget that the China's effect and the China's impact on the markets could continue, and that's the most important thing that you have to actually pay attention on. So we're going to go through the calendar of today and tomorrow. So we are going to watch what kind of economically releases we are going to have during today and tomorrow. So today's Tuesday, and tomorrow Wednesday. For today, we had some important releases from United States, but a calendar is kind of empty. There was only one important release, which was related to the European Central Bank President Lagarde speech, which is, as you know, which is going to be always dovish, because Europe is not in the situation that could cut the governmental help, or hike the interest rate, or tighten the monetary policy. So because of all of these factors, there's no chances for Europe and European Central Bank to hike the interest rate and help the Europe to rise. So that's the main scenario which we're going to have. But for tomorrow, we are going to have some releases from Britain, CPI, which is rising in Great Britain, and as you know, the price of pound is more strength, and it's kind of more even less weak than euro or the other currencies to United States dollar, and that's the main situation. This main reason why the price of British pound is not falling as, for example, euro falls, as for example Australian or New Zealand dollar falls. So there's a main thing that you have to actually pay attention nowadays on the markets. The other release for tomorrow, crude oil inventories, which is really important, and it's going to fall. That's a really good signal for oil prices. And as you know, when some sharp movements happen on the market, the next movement is going to be reversal. So I have already seen the situation on the oil market, this sharp downward movement, and next strengthening. But here for now, for today's American session, maybe for tomorrow's European Asian session, we are going to have the continuation of this downward movement. But be ready that around 104 or about 100, you can actually get into the bullish market again, and that would be a situation which would continue if China doesn't get into the situation, if China won't speculate, because as you know, war in Ukraine is continuing and it's going to continue long, and that's what analysts say. And China, it showed that it could give it its own impact on the markets. It just said that there's some infection spreading in some cities, and because of the fear of this, that's what happened to the oil prices. So you have to pay attention till China isn't closed, isn't till China is working, till China firms and industries working, there won't be really real high pressure on oil prices. So that's what we are going to have in the near future. But pay attention to what China is doing now and to what kind of policy China is going to use due to the situation which we have, which we are going to have during next month and maybe even next month and a half, which is related to the Ukrainian-Russian war. So let's go through the situation with the coronavirus. As we see, coronavirus cases are rising again, and the speed of warming temperature, and despite the spring, and despite all of these factors, as we see, there is some signs that coronavirus cases are kind of rising. So that's another thing that you have to pay attention on. If something like this, like coronavirus cases rising, spreading, like get higher and continue more powerfully, it would really mean that stock market is going to be under high pressure and oil prices are going to be under high pressure as well. So that's the game changer. That's the main game changer now. The coronavirus and China's policy. And as we know, China's news. So China could one day say that there is some infections in some cities. Another day it could say that, oh, there's nothing. So just showing its own power that it has on the markets, especially after China, after what it have done to United States and previous president. So there is some factors that you have to pay attention on. United States dollar index is in the consolidational movement. So this consolidation could really cause the next powerful impulsive movement. For now, we're going to have some retest of 98 and 97.50. So 98, 97.50 are the levels that are going to retest. And mainly, I think that bulls need to get ready. So after this movement, they could get into the bullish market again. But don't forget, for near future, dollar prices could really impulsively, just speculatively retest the local minimums of 98 and 97.50. What's going on with the stock market prices? As we see here, uh, they have been rose. They have been rose like for some 2 days ago, and it was exactly related. Again, it was related to the China's outcoming about the coronavirus. So this is a really impulsive upward movement. I don't believe that this movement could continue, especially because of this consolidation near to the really important level of 4,500. 500. It's for S&P 500, and this level, before we get above this level, before we get to retest this level and get strengthened above this level, we cannot say that prices are going to rise further. If we are going to have any kind of speculative upward impulses in the near future, that's a really great signal for for bears to get into the market again. So for sellers to get into the market again and just short it after the speculative retest of 4,500, 4,550. And this could be a really good signal, but I just need to see there would be another situation when prices rise and rise for 1 day, 1, 2, 3 days, but volatility is getting shrink. And when the volatility gets shrink and you're rising, this is another signal of reversal, but it's a really slow signal. So you have to wait for the signal to work. So these three scenarios that we could have here now, because prices definitely are going to continue the downward movement, but here we are going to have some speculative movements. This speculation could appear in the form of for example, a wedge, a rising wedge, or a rising channel. These are the reversal patterns. Or it could just happen after a really impulsive retest of 4,500, 4,550. So that's what we can actually say due to the technical picture of S&P 500. Dow Jones prices, $35,000, and as we see as well, there is the stop in the upward movement. There is some consolidation on the 4-hour chart, which is not a really good signal for buyers. And previous movement was really impulsive, even have been done with a formation of a gap distance between the opening and closing of the candles during the session. So that's a really good signal for buyers. That's a really good signal for bulls. And as we see here, we have some downward channel which is continuing, and it will continue. But don't forget that we could get some speculative upward impulses, and that's the risk of the future positions, short positions. If we say 36,000 even could get retest, and 35,500 as well. 35,500, 36,000, they really could get retest. But in the case of their speculative retest, or in the case of volatility shrinking by the next rising of the prices, we could get actually the signal, the fast, which is the first on fast signal, or the slow signal of a reversal. So we have to just pay attention what is going on, and if we catch this kind of formations, if we catch on the picture this kind of signals, you have to pay attention that there would be a reversal. And that was the industrial index of United States stock market, and the IT index, the, as we say, high tech index, NASDAQ 100, which costs now about higher than 14,000, but 14,800, 15,000 is the main resistance. So there could be some speculation till the retest of this range of 14,800, 15,000. But you should know that this is all is a speculative movement. So this sharp movement here is a real midterm signal of price failure, of price falling in the near future. So here as well, we don't really have any kind of signal of moderate continuation of the upward movement. So I don't really recommend bulls or buyers to continue the positions here and now. You really need to just pay attention. Maybe you could continue the positions that you have already opened from previous week, but to opening in new ones, I think that this moment today, tomorrow won't be a really good time. Crude oil prices, we have already checked it. There was some speculation from China, which made prices to do this downward movement. But anyway, we are above a really important psychological level of 100. So the retest of 100 could continue by consolidation, could continue by reversal, and you just need to wait for it. So maybe for now we could be more sure about some downward impulses, but don't forget that main trend is upward, and prices are kind of getting even strengthened above 105, which is a local support. So because of that, I cannot really say that there would be some moderate downward movement which could continue for some sessions, but I can say that they would be really impulsive if they happen, and this could be a really good signal for next reversal and the next strengthening of the prices. But for now, for today, just get ready for some speculative downward impulses, which you could use for trading by the using a 5-minute chart or 15-minute chart as well. And the natural gas, look how it is continuing to rise, because the situation, because the impact, the reason why oil prices fell down previously was straightly related to China's factory and to China's lockdown fear, which have just rose really highly because of what they said, that there's some infections spreading through China, across China, and gas really didn't even change the trend. It didn't even change the trend. It's continuing to rise because gas is not really related to China, but China as main importer of oil could really have their own impact on the oil prices. So as you know, the war which is continuing between Ukraine and Russia is the main reason why the sanctions are continuing against Russian program of Nord Stream 2, and Nord Stream 1 doesn't work as well. But there is some little chances which could really get bigger in the future if situation in the Ukraine get better. So it's going to get better, nobody knows, but it could impact the gas market really highly. So if there is any suspicion, or if there is any harsh conflicts in Ukraine, this would really help gas prices to rise further, because it would mean that sanctions are going to continue against Russia. But in the case of approval of any kind, for example, talks between Russia and Ukraine, for example, war delegations, which happen within some once in a week or twice in a week. After this kind of things, the price of gas and oil could really kind of speculatively just fall. But the main trend here is upward. So don't forget, $4.80, $4.60 are the risk range for buyers. So because of today's impulsive movement, which is actually continuing, you cannot say that prices could really make this upward movement to come true during next session. So they would maybe need some correction to 480 and to 460, and then they could return and continue the upward movement. And let's see what is going on with commodity markets. Commodity market rise, and in the case if something bad goes on with the stock market, as you know, stock market started to fall, but the main reason why it's falling is the Federal Reserve System interest rate hiking, which could happen, which could get harsher, and the monetary policy, which could get tighter for FRS monetary policy, Federal Reserve System. And because of that, the gold prices won't really rise in this case, because they could be under the pressure of higher value of the dollar which make commodity markets to fall. So there's only one thing that could help, really help gold. It's when China's economy and Russia economy ditch dollar, for example. But that's a process that could happen during some months if they even started. So it could happen during some months, during some maybe year or years, to ditching the dollar from your economy. I mean, for Russia, for China, and they are kind of trying to do it, but that's not happened yet. So if something like that happened, if these countries or some OPEC plus countries, oil countries, start to ditch dollar, for example, from oil supplies, when they buy and sell dollar, not oil, not by dollars, but by, for example, uh, their own nation currencies, or for example, euros, pounds, or I don't know, so Mexican pesos or something like that. If something like that happened, the dollar could really get kind of dished. But that's not the situation which is going on today. That's the situation which could happen. That's the thing that could happen in the far future, within some maybe year. So it's really early to talk about it. And as you know, gold prices for now, they couldn't really rise until stock market get a really good downward impulse. So if we get a downward impulse on the stock markets of United States, which is kind of not realistic, because stock market of United States continuing a moderate downward movement, which means that prices are not actually falling and they are not actually rising as well. So in the midterm, gold doesn't have a really good chances to rise. But in short term, it could make some upward impulses inside the downward channel which is now forming. So we have 1900, 1880, the main supports which could get retested in the near future. And after the retest of the supports, prices could return to the upward movement, which could help markets too, which could help traders and bulls to return to the market for some maybe days or some maybe weeks. And silver prices as well. Here is a really impulsive retest of local supports of 2450, 2460, and it could actually continue. It could actually even, I think that it could break through the local minimums. It could even continue to 2450, 24. You need to know that after this kind of impulsive movements, prices are not going to continue the main trend. So if something like that happens, if silver prices shows that they close today under local minimums, and not just close but impulsively, with an impulsive candles close under them, it means that next day they would be bullish, they would rise, or they at least they would stop this really fast and sharp downward trend. So don't forget about this factor as well. Platinum and palladium. Palladium, as you know, semiconductor companies which make chips for cars, for computer system, and for different type of technology sectors, they really need the palladium supply. And it's not really related to platinum, but with the palladium supply, which comes mostly from Russia, and Russia is under the sanctions. So the main thing that we can say about palladium, which its own upward movement would even continue despite gold's or silver's downward movement. So palladium is kind of getting really ditched from the whole commodity market, because it's really under the sanctions, and because the Russia is the main country which supplied palladium to the other countries for chip makers, which are the factories in which they make semiconductor products for cars, for computers, and all of them could be under pressure. But the prices are going to rise. Prices of platinum are going to rise, and platinum, of course, is going to rise as well. Here is a speculative downward impulse. It would really continue in the near future. 1980 are the levels which could get retest, and after the retest of these levels, we're going to see some upward reversal. Here for palladium, 2400, 2300 are the levels that could get retested, but that's only the range of the risk. So we have to wait for prices to retest these levels and then return to the main position trading, which are bullish, which are long. Forex pairs: euro, pound, which is more strength, Australian dollar, which is not bad as well, and New Zealand dollar. Unfortunately, all of them, except euro, showing us that they had some impulsive upward movements. They had some impulsive rising movement, which could be related to the oil prices rising. But I think that oil prices won't sharply rise in next sessions or in next days. So there would be a chance for dollar to continue to rise. And this could make Australian dollar and New Zealand dollar to fall down again. So don't forget that there is some local maximums which are now impulsively retesting. We have some shrinking of the volatility while we are rising and while we are getting near to this local maximum. And of course, if I turn on the oscillator indicator, we could even see, maybe we could even see the divergence, which is now happening. Look at this divergence between oscillator lines and between maximums of previous 3 days. So because of the situation, I can't really say that this upward movement could continue in midterm, but I can say that impulsiveness of this movement could really finish after the test of 0.75. That's for Australian dollar and New Zealand dollar. 0.70, which is a very important psychological level. So here as well we have the divergence, but I won't show you because there would be time to take. So because of all these factors, maybe Australian dollar and New Zealand dollar are showing us that the potential of United States dollar rising during next days, during next sessions, are more higher than cross courses like New Zealand dollar, Australian, or even GBP and Euro. GBP as well, it's really impulsively rising. There is a mirror level which is now retesting 1.3350, 1.33, and after the retest of this range, we are going to reverse. Let's see what's going on with the Euro prices. Euro prices are showing us that they're rising really moderately, but unfortunately 1050 is a level above which I think that we are not going to strengthen. And especially if we get any kind of impulsive upward retests of this range of 1.1050, 1.11, that would mean that prices are going to reverse. So just wait for next signals which you are going to have and which you are going to get. And I think here we are going to have the continuation of downward movement, mostly because we are getting really shrink volatility under mirror level, and that's a bad signal for midterm trend. Yes, we could impulsively retest the local resistance of 1.1050, 1.11, but after that we are going to reverse. So we're kind of getting close to the end of the program. United States dollar to Canadian dollar, which is related to the oil prices as well, showing us that the volatility is getting really shrink. So here maybe we are actually observing after convergence. Let's see if is there any kind of convergence. Yes, it is. So here we have a convergence, as you see, between the line of oscillator and between the minimums, which is showing you that there is a possibility of the upward trend starting in the near future. So that's a 4-hour chart. It means that within some sessions, after American session, maybe at the end of today's American session, prices of this pair is going to reverse. But before they reverse, there is a probability of the impulsive retest and the impulsive downward movement or speculative movement and the retest of the nearest target, the nearest psychological level. To say what is the nearest psychological level, it's 1.25, which could get retested, but we are not really sure that they could get to 1.25, they could get to 1.2550 or 1.2530. So we just need to wait. So prices make this impulsive movement. There's a convergence, there's a kind of midterm convergence, which is a really good sign of a reversal. So we just need to wait for a reversal. And the next trend, it could be really moderate. And it could be really midterm continuing trend, which is better than any scalping, or any short trend movements, which could make you to just make more mistakes. So there's a United States dollar to Swiss franc and the United States dollar to Japanese yen, which are mostly rising because dollar prices are rising against the defensive assets. And I think that they could get some downward correctional movement, but that's not a real trend. So just get ready to get into the bullish market again. Local supports, local mirror levels, you can actually see them, so you don't even need my help. Bitcoin prices and Ethereum prices, the prices of the most important and most famous cryptocurrencies. As we said, and as we remind you from previous times, price of Bitcoin and Ethereum are kind of inside a really harsh consolidation, and they're not going to rise as we would like to, and they're actually going to fall further. But you need to wait for them to make some speculative retest of local resistance, which we have, which is a resistance which is actually mirror level 47,000, 50,000, and 47,000 are the levels which could get retested in the near future. But you need to know that if we get amplitude shrinking or amplitude lowering before they get to these levels, it won't be that they're even getting to retest them. So pay attention to this factor. Look at the oscillator if there is any convergence or divergence, so you could get some reversal movements. And for the Ethereum situation could be really as well the same. We are now retesting a really important levels and mirror range, 3,200, 3,000. That's a psychological level, and speculations here are going to happen. We have to. There would be a speculation. Mostly, there would be a bullish speculation, and after this bullish speculation, after some speculative upward impulse, we're going to get into the downward trend, unfortunately. So thank you guys for watching this video. Don't forget to check our channel. Don't forget to check our official website. There's two different types of instruments and courses for Forex traders, for cryptocurrency traders, and for stock markets investors and traders as well. So you could use them and be more professional during working with these assets and with this market. Don't forget to subscribe on the channel and ring the bell so you would know in which time our programs are going to get published. Till next time, guys, care yourself and have good tradings. Bye bye.